Today our topic is partnership account. It is very important chapter for accounting students. Sometimes many of you get confused when you try to answer this question. So today here I'll show you a question taken from Cambridge A-level past paper. So here we will see the question, adjustments and how to answer. So before we start, let us have a look at the question. Bipin, Feroz and Nero have been in partnership for many years, sharing profit and losses in the ratio of 3:1:2 respectively. Okay. Feroz decided to retire from the partnership with effect from 1st January 2022. On this date, the statement of financial position was available. So here we see non-current asset, current liabilities, non-current liabilities and total asset. Okay. So this is the balance sheet. So one partner will retire from the business and another partner will join. Okay. So this type of question is very complicated, but if you understand properly, you'll be able to answer in your exam. Okay. Then we have some adjustments. Let us have a look at there. So what is written here, we see here four adjustments. So we will adjust this one by one when you prepare the capital account. And here what is written, the requirement, prepare the partner's capital account to record the retirement of Feroz. So Feroz is a partner, so he will retire from the business. So for him now we will prepare the capital account of the partnership business. Okay. So here you see this is the format. So here we have detail and three partners, Bipin, Feroz and Nero. Here we have detail same three partners, Bipin, Feroz and Nero. This side, these four columns are credit column and these four columns are debit column. Okay. So first of all we need to know the ratio to share profit or loss. Okay. So here on the question we see, so Bipin will get 3 shares and Feroz hold 1 and Nero 2. Okay. This is the existing ratio to share the profit or loss. Okay. So let us write here also 3:1:2. Okay. Good. So here now we will see our financial statement once again. So here we see capital account. Okay. So here Bipin balance is $72,000. Feroz balance is $44,300 and Nero's balance is $57,000. Okay. So this is the balance of capital account. So this balance will be here first of all. Okay. This is the opening balance. Okay. So it is balance brought down or balance BD. Okay. So we will write here balance BD. So we are writing credit side because capital is normal credit balance. Okay. So here the amount for Bipin $72,000 capital and for Bipin it is $44,300 and for Nero it is $57,000. Okay. So this is the opening balance of the capital account. Okay. So don't forget to write this balance on the credit side. This is the first item. Okay. Now we will see the adjustment on the question. So here the first adjustment, non-current asset were revalued at $155,000 and inventory was revalued at $13,160. So here on the question, all non-current asset means statement of financial position, non-current asset is $132,000 and inventory is $17,560. Okay. So we notice here, what you notice, the value of non-current asset is increased and the value of inventory is here decreased. Okay. So here the present value, okay, the current value is for non-current asset $155,000 and on the statement of financial position the value was $132,000. Okay. Now if we subtract, we see $23,000. Okay. This is the increase of the non-current asset, but at the same time the value of inventory is here decreased. Okay. Current value is $13,160 and the value in the statement of financial position is 17,560, right? So here 17,560. So if we subtract, we get here. So here we get minus $4,400. Okay, this amount is decreased here. Okay, so what you see, for inventory, price decreased, and for non-current asset, price increased. Now, how much net amount of asset increased or decreased? So here for non-current asset, value is increased by $23,000. For inventory, value is decreased by $4,400. Okay, so now if we subtract this amount from here, we get $18,600. Okay, so this amount will be here now in the capital account, but which side? So here for this amount, the capital will be increased. Okay, so if capital increased, we will write on the credit side. If capital decreased, we will write here on the debit side. Okay, so here capital increased, we will write on the credit side. Okay, so what we write here? We will write revaluation. Okay, now how much will be here for Bipin, Feroz and Nero? So here Bipin has 3 shares, Feroz 1 and Nero 2. Okay, so total here 3 plus 1 plus 4 are 2 equal to 6. Okay, we will divide this amount by 6. Okay, if we divide, how much we get here? 3,100, right? Okay, so 3,100. So Bipin has 3 shares. So 3,000 times 3 equal to here $9,300. Okay, Niru has 1 share. So 3,100 times 1. So it is same $3,100. Okay, for Feroz, for Niru, sorry, it is $3,100 times 2. Okay, because his share is 2 here. So here it will be $6,200. Okay, so we finished first adjustment. Okay, now let us have a look at the question for number 2. Goodwill was valued at $39,000. Okay, it was agreed that a goodwill account was not to be maintained in the books of the partnership. Okay, so first of all, we have to write the amount of goodwill. Okay, it is valued $39,000. Okay, so all 3 partners have right to get the amount from the goodwill. Okay, so here first of all, we'll check for how much money, how much amount will be given to each of the partners. Okay, same here, same calculation. So the value of goodwill was $39,000. Okay, how many total share is 6? So if we divide by 6, we get here. So here we get $6,500. Okay, for each share. So now where to write the goodwill, here this side or this side? So here goodwill will increase the value of capital. Okay, so this is the reason it will come on the credit side. That means when capital increased, capital is credited. When capital is decreased, capital is debited. Here capital increased, so here capital will be credited, so we will come on the credit side. Okay, so let us write here goodwill adjustment. Goodwill adjustment. Okay, so here Bipin has 3 shares, so $6,500 times 3. So here he will get $19,500. For Feroz, same, $6,500 times 1. So it will be here same amount, $6,500. And for Nero, 2 shares here, 2. So $6,500 times 2. It will be here $13,000. Okay, so we adjusted second one. Okay, now let us have a look at the question for number 3. Bipin and Nero agreed to remain in the partnership sharing profit and loss equally. Okay, so for these 2 partners now, when Feroz will retire, that time after that Bipin and Nero will get same profit and loss share. So here Bipin is 3, Nero will be also 3. Okay, so 3:3. This is written on the question. Next we have number 4. On his retirement, Firoz agreed to take a non-current asset as its valuation of $15,000. He agreed to leave the remaining amount due to him as a loan to the partnership. Okay, so here Firoz, he agreed, he will retire from the business. Now he agreed to take 15,000, okay, from the non-current asset, whatever value for non-current asset. From there Firoz will only take $15,000 and others he will leave because he has loan in the business. Okay, so for the liability of the loan will be taken by the new partner, okay, taken by Niro, because Niro will take the share of Firoz. Okay, now here this partnership business has to give $15,000 to Firoz. So here capital will be increased or decreased? Yeah, it is decreased. So when capital decreased, I told you it will come on the debit side. Okay, so let us write here non-current asset. Here only Firoz will get $15,000. Okay, so great, we wrote all the things from the adjustment. Now here we see the goodwill was here on the question, $39,000, and the partners were agreed that this goodwill will not be in the partnership account. Okay, so now the owner of the goodwill will be only two partners. Which two? The remaining two partners, Bipin and Niro. Okay, so here the $39,000 will be now distributed to the Bipin and Niro. Okay, so here from the capital this amount will go to the partners account, means Niro and Bipin's account. Okay, so here capital will be decreased, so we will write this amount on the debit side. Okay, so let us write here goodwill adjustment. Okay, so here we have an adjustment on the question. Then after the retirement of Firoz, Bipin and Niro will get same share of profit and losses. So before Bipin was 3 and Niro was 2, now they will get 3:3. Okay, so here the amount for goodwill was $39,000. So if we divide this amount by 2, then we will get here $19,500. Okay, so each partner will get same amount, $19,500 for Bipin and $19,500 for Niro. Okay, so now Firoz has 0 amount. Okay, because he already retired from the business. So goodwill, here business received all the amount for goodwill. Okay, all $39,000. And from the $39,000, Bipin and Niro received equal amount. Okay, because Niro took the share of Firoz. Okay, great. Now we have one more balance on the question. So here we have current account balance. So here Bipin, it is $240, Firoz $1,980, and Niro is $27,050. Okay, so this all amount will not come here as Firoz is leaving the business. So Firoz current account balance will come here. Okay, so this money, this $1,980 now given to the Firoz. Okay, from the capital. So here capital will be decreased. Okay, so we will write here current account. So here the Firoz current account amount balance is $1,980. Okay, so we have written all the things. Okay, now we will balance. How to balance? Balancing part is quite simple. Okay, so first of all we will balance Niro's column. So here we will check which column is greater, debit column or credit column. So if we see the credit column is greater, right? So you have here more amounts, more figures. So if we sum up this column, we get $76,200. Okay, so this is the addition of this column. Now we will take this amount to the opposite side, means debit side. So here we will write $76,200. Okay, Now we will subtract these amounts from here. We have here only one amount. So here $70,200 minus $9,500. We get here $56,700. Okay. So this is the closing amount for Niru. Now we will check Bipin's amount, Bipin's balance CD. So here we have $19,500. Here we have more. So we will calculate the credit column first. So total is here $100,800. Okay. So we will take this amount here on the debit side, $100,800. Now we will subtract this amount from this total. So we get here, if we subtract $81,300. Okay. So now Firuz, why Firuz last? There is a reason. Okay. So let us check first. Here we have two amounts. Here we have three amounts. Definitely this column is greater. So let us sum up this column first. We get here $53,900. Then we will come to this column, the debit side, $53,900. Okay. So now if we subtract these two amounts, we get here. So why we wrote this balance here? This side. Okay, so on the question we have an adjustment. Let us have a look at there. So look at adjustment number 4 here. On his retirement, Firuz agreed to take a non-current asset as its valuation of $15,000. Okay, he agreed to leave the remaining amount due to him as a loan to the partnership. Okay, so this is the amount he owes to the business. Okay, this is the loan amount. Okay, so we will write here loan, L-O-A-N, loan. Okay. So it is $36,000, $920. For this loan, he has to take only $15,000 from the non-current asset. Okay. So now, what is these two amounts? $81,300 here. This is the balance figure, right? So we will write here balance CD. Okay. CD stands for balance carried down. Okay. So now we will bring down this balance on the debit side. So let us write here balance BD, means balance brought down. Okay. So here Bipin's balance is $81,300 and Niru's balance is $56,700. Okay. No balance for Firuz because Firuz is no more in the business. He retired from the business. So next tutorial I'll show you second part of the capital account, means how much Niru has to introduce to the business or has to take from the business because he has taken the share of Firuz who retired from the business.